Hello to everybody who's filing in. We'll just give it a minute or two for people to take their virtual seats and then we'll get underway. Hi, everyone that's coming in. You're in the right place. I'll make it at 3 o'clock. We'll just give it another 30 seconds just for a few more people to join, and then we'll get started. Okay, no time like the present. Let's get underway. Good afternoon, everybody. Thank you for joining us. I'm John Bergin from the Walkley Foundation. Now, before we begin, I'd like to acknowledge the traditional custodians of the land on which we meet today. I'm joining you from Redfern in Sydney. That's on Gadigal land of the Eora Nation. And I pay my respects to elders past, present, and emerging. And of course, I extend that respect to Aboriginal and Torres Strait Islanders, peoples who might be joining us from across the country. Well, today's session is an information briefing about From Bottom Line to Headlines, Public Finance for Journalists. It's an exclusive one-day intensive workshop designed to strengthen journalists' understanding of how state and Commonwealth budgets are made, how spending decisions take shape, and the fiscal and economic dimensions of policies and government services. A critical role of the Walkley Foundation is to support and strengthen public interest journalism across Australia through training, leadership programs, and skills-based initiatives for reporters at every stage in their careers. We're pleased to be collaborating with McKinnon on this initiative because it aligns closely with our shared commitment to building journalistic capability in areas that matter for democratic accountability. So together, we see this program as a really practical way to support stronger scrutiny, clearer storytelling, and more informed public debate now about how and how well public money is spent. Today is about helping you decide whether this program is right for you and what's involved if you apply. We'll walk through what the program covers, who it's for, how the selection process works, what's expected after the workshop, and the practical details around travel and timing. Later, we'll be joined by Michael Stutchbury, Executive Director of the Centre for Independent Studies and, of course, former Editor-in-Chief of the Australian Financial Review. We'll hear from Michael shortly about the fiscal challenges facing Australia and why stronger fiscal literacy across the media matters. Now, before we do that, I'd like to invite Jason Tabarias from McKinnon to speak about the organisation and why it's supporting this initiative. Jason.
Thanks, John, and thanks to everyone else for joining the call today. Really glad to be talking to you all about this program and why it exists. Three things from me today. I really want to talk a little bit about McKinnon, who we are, why we're bringing this program to life, why we're funding the program for both Walkley and for all the attendees, and the challenges that exist in the Australian government fiscal landscape that we're looking to hopefully address through this. But I'd also like to finish off by talking about the role of media in our democracy, and I think that the important role that all of you play currently and hopefully more in the future in bringing about a more vibrant discussion about these really important topics. So I'm the program director for our public sector stream, and this program is something that we've been thinking about for many years, and I'm very glad that it's finally come to light. McKinnon is a non-partisan think and do tank, and our vision is for better governments and for a stronger Australia. There are four elements to our work. We spend a lot of time thinking about political leadership and run programs to help train the current and next generation of political leaders in good political practice. We care about policy innovation, and we care about bringing those good practices from around the world to Australia and spreading them. And we also care about democracy and enhancing Australia's the quality and inclusivity of our democracy and the sustainability of democracy for Australia's future. Within the public sector program that I run, the fiscal sustainability stream is what this is what's really motivating this program for us today. We recognise the political incentives to think and focus on the short term. But we would like to bring about changes that encourage politicians to think more deeply and consider the long-term impacts of spending today. As Michael will tell you soon, Australia has had a long wave of good fortune, and that has underpinned our prosperity for many years. But that's arguably coming to an end. Maybe it's already ended. We face new challenges going forward, but the spending patterns of government are really stuck in the past and harder to shift. The things that are coming at us include demographic change and aging, challenges of addressing climate change, and global geopolitics. As we know, this week we can see significant changes. There are rules and institutions within Australian public administration that help us deal with these challenges and making sure that our budget is fit for the future. We have rules and laws, guidance on spending. We have institutions like a 10-year budget outlooks, intergenerational reports, a range of these things that are really, really helpful practice. And there's even proposals on the table to do more and to do better. We see practices in Victoria like an early intervention investment fund, and the PC's call for a national preventive investment fund. Both of these trying to bend the arc of spending, including by engaging earlier and spending earlier in a way that helps improve people's lives, as well as reduce the fiscal outlay of governments to address some of these bigger challenges. But unfortunately, these institutions aren't always working or progressing as much as we would hope. In part, because we recognize there's not the political incentive within the system to think and act in the long term. But also in part because we see that there's a lack of awareness and engagement, and sometimes just the expectations of the public. That pressure is not being brought to bear in the political system enough. And so information is not demanded, and this information is not being used to hold governments to account. And this is where I hope all of you come into it. McKinnon is firmly wedded to the idea that quality journalism is a foundational aspect of our democracy. Now, we do see daily that there is a core group of elite media that will report on these issues, will hold government to account, will bring this information to light. But we don't see widespread engagement in these issues beyond a core group. And we need these issues to be reaching out to a greater slice of Australians in order for it to impact on political incentives. We also recognise the reality of a modern media environment. Training budgets are tight, timeframes are tight, there's a lot of pressure on journalists, and that landscape's changing all the time too. So we understand that fiscal issues, they're challenging to communicate clearly and simply, but it's critical for democracy that we do find good ways of doing so. Spending $1 on education or health it means not spending $1 on defense or the environment. These are choices that we make in budgets that really matter to people and to our lives. You could take the view that the main role of government is really choosing what to spend these resources on and how. So that's why we're investing in this program, to help improve your understanding of budgets and the fiscal dimensions of policy, and then hopefully in turn increase the awareness and engagement of the Australian public in this slice of democracy. Thanks very much, John. Hand back to you.
Thanks very much, Jason. It's now my pleasure to introduce Michael Stutchbury. Michael is Executive Director of the Centre for Independent Studies and the former Editor-in-Chief of the Australian Financial Review, where he led the masthead from 2011 to 2024. Now, across decades in journalism, including stints as economics editor and later editor of The Australian, Michael has shaped national debate on fiscal policy, taxation, productivity, and economic reform. Few people have had a closer view of how fiscal policy, politics, and markets intersect in Australia. Michael will now provide a broader perspective on the fiscal challenges facing the country and why deeper fiscal literacy across the media matters. And I'm warning you now, we will have an opportunity to take questions and put them to Michael. So hit that Q&A button at the bottom of the screen, lodge your question, anything that springs to mind while Michael is talking, and hopefully we'll be able to get to your question during the Q&A session. Michael, thank you very much for joining us.
Well, thank you, John. Thank you, Jason. And thanks to McKinnon and the Walkleys for inviting me to speak about public finances and budget or fiscal policy and the role of journalists. Longevity, as you referred to, and some memory supposedly qualifies me to speak to you today. I think my first federal budget was 1983. So it's more than 4 decades ago, but not as long ago as Ross Gittins can claim. Now, what are we talking about when we refer to budgets or fiscal policy? At the most basic, it is all the decisions that governments take to spend, tax, and borrow money. Fiscal policy traditionally is used to manage the ups and downs of the business cycle. It is also society's main collective means of delivering services such as education, public health, and defence, or to discourage vices such as smoking. And we can talk about that public policy disaster later if you like. Fiscal policy is the main lever for redistributing income within society between rich and poor households, but also between richer and poorer states, such as through the GST carve-up. And of course, it's an inherently political policy instrument. Politicians use fiscal policy to get your vote, or at least 50.1% of your vote on a two-party preferred basis. I'll build my remarks around 3 basic propositions. First, that Australia is a prosperous nation, more prosperous than many appreciate. But this prosperity cannot be taken for granted, and in fact, it is now at risk. My second proposition is that disciplined budget policy was one of the solid macroeconomic foundations of Australia's 3 or so decades of rising prosperity, but also that ill-disciplined budget policy now is eroding these foundations. And my third proposition is that journalists have an important role to play in informing the public on the fiscal risks that governments are taking on, particularly for younger and future generations. So starting with proposition 1, when I started journalism, amazingly 50 years ago this year, Australia was a mediocre place. In the late 1970s, the founder of Singapore, Lee Kuan Yew, warned that we were at risk of becoming the poor white trash of Asia. Over the following 4 or 5 decades, Australia lifted itself into the top echelon of global prosperity. And today, our per capita GDP, so total GDP or income divided by population, per capita GDP is 10 to 15% higher than for Germany and Sweden, 20 to 25% higher than the UK or Canada, and more again than that for Japan and Korea. And that's because we are smarter than the Germans and the Swedes, and we work harder than the Japanese or the Koreans. No, we aren't, and no, we don't. Particularly in the 1980s and 1990s, what happened into the 2000s, we made some very good policy decisions that boosted productivity and prosperity. And after that, we got very lucky with China. But this prosperity topped out in 2011 when the price of our biggest export, iron ore, peaked at $180 US dollars a tonne. That pumped up the budget with royalties and taxes on mining profits. But since then, Australia has been making mostly bad policy decisions, and our luck has turned a bit against us, as luck tends to do sometimes. So proposition 2, the previous good era of budget policy involved laying down all sorts of, as Jason mentioned, all sorts of budget procedures that governments and the bureaucrats were required to follow by law. These have mostly sought to require more transparency about the state of the books, both now and into the future. So we get a charter of budget honesty, we get 10-year budget forecasts, 5-year intergenerational reports, MyEFO, PFO, and the PBO, all the acronyms of the budget architecture, institutional architecture. But this good period of budget policy also involved governments being prepared to seriously tighten fiscal policy from time to time, to cut spending programs that affect people or to increase taxes, as well as doing the opposite in hard times, that is to boost spending and to cut taxes. The problem today is that the traditional budget constraint, the old idea that the government should live within their means, has sort of gone. It died with the political collapse of the Abbott hockey budget of 2014. That's over a decade ago. There's a basic adage in economics that there's no such thing as a free lunch, and that's mostly gone. The federal government used to have ways to keep state governments, or at least how much they could borrow, under control, but that's gone too, as highlighted by the basket cases of Victoria and Tasmania in particular. So we have an asymmetry in budget policy. Governments are encouraged to spend up and borrow as much as they can during downturns, such as in the pandemic, but they're not allowed to commensurately cut spending or increase taxes and pay back debt during upswings. So that asymmetry leads to a ratcheting up of the size of government. Now, in large part, it's a failure of political culture, which I put down to the modern politics of culture and identity, broadly defined. Everything's now about what people feel. And collectively, we're happy to take more than we give. Now, calculations by the Centre for Independent Studies estimate that perhaps half of voters now earn at least half their income from government. That's an increase. As our friends at E61 think tank point out, the trend for more universal, non-means tested handouts, and think of the promise of universal childcare, is encouraging a culture of middle-class dependency on the state. Now, because there is no such thing as a free lunch, this is having consequences. For 15 years or so, Australia's political economy has been more about redistributing our prosperity than securing it and improving on it for the future. So prosperity has encouraged political budget promises that have been built into outrageously expensive spending monuments. The $50 billion NDIS has metastasized into a fiscal Frankenstein that has gone way beyond its brief. And I just dug up this old Financial Review, page 1 from 2012, when we splashed page 1 on fears from the Australian government actuary that the NDIS cost could blow out to more than $10 billion. And hey, now it's $50 billion and still rising rapidly. Then you had the Gonski School Spend-a-thon, which has come with falling school performance. The NBN government broadband monopoly has been written down by $30 billion or so. CIS scholars estimate that the federal subsidies directed to the highly regulated formal childcare centre could alternatively give every $9,000 per child to every family with a child aged under 5. Now, the spend-a-thon accelerated during the pandemic. The size of government is ratcheting up by several percentage points of GDP. The budget papers project, and you can see it, they're all open about it, project deficits stretching out at least until the mid-2030s. That means deficits for all but 2 years of a 20-year stretch. And that's lifted federal public debt from zero to $1 trillion. Now, this does have consequences. The excessive increase in spending has largely been in low productivity care economy activities. This has dragged down the economy's overall productivity growth. It means it's one of the reasons why the economy now can only grow about 2% a year in real terms before running into capacity constraints that feed into inflation. By historical terms, that's a very low rate of growth that we can sustain in the Australian economy now. And that's why the Reserve Bank is being forced to reverse ferret, as they say, on interest rates. And this bad fiscal policy is also raising the related risks of financial sustainability. And what every galah in the pet shop now is talking about, intergenerational equity. This intergenerational equity question, of course, shows up in worsening housing affordability. But the string of projected budget deficits and the rising public debt can be thought of as fiscal burdens that sustain the current generation by taking from the next generation. It represents increased taxes that mostly younger wage and salary earners may have to bear in the future to pay off today's debts. In fact, the official budget papers show that the budget will only get back to balance a decade from now through increased stealth taxes on wage and salary earners as inflation pushes them into higher tax brackets. That itself will have consequences because taking progressively more of every extra dollar that younger workers earn by stealth will discourage enterprise and limit the size of the overall pie. So-called bracket creep is one of the great political illusions of fiscal policy. Government election tax bribes typically mostly just return some of the extra tax that has already stealthily been imposed through inflation, something that journalists should point out more. The main question about my proposition 2 is what authority would determine when the budget has become unsustainable? And if that happens, who exactly would enforce the correction? The answer, of course, is the bond market stupid. That is, those who lend money to the government by purchasing its debt. When will they become so alarmed by the possibility that the government may not honour its promise to pay them back that they charge a much higher interest rate premium than they do now? The puzzle is that the bond market so far has not revolted even against the bigger government deficits and debts in Europe, in the UK, and in the US. But there have been some foreshocks. The Greek debt crisis in the wake of the GFC, or the revolt against the Liz Truss UK budget in 2022. Could this happen in Australia, perhaps sparked by a Fed bailout for Victoria or Tasmania? On the never never can quickly telescope into today's present danger. Now, before the pandemic, it was popular in some circles to argue that budget deficits don't matter because governments or their central banks can simply print more money to finance them. Now, the federal government did run a couple of budget surpluses in the wake of the pandemic, but that was largely due to a burst of inflation of commodity export prices and domestic consumer prices. And historically, governments have frequently fixed their debt problems by printing more money. And we're still experiencing the inflation that fuels today. My third proposition, remember, is that journalists have an important role in informing the public about the fiscal risks that politicians and governments are taking, particularly for younger and future generations. Now, journalists can begin with becoming better acquainted with the nuts and bolts of the budget. For example, a very handy set of historical papers can be found in the appendix of every federal budget paper, number 1. By convention, the most used measure of the budget bottom line is called the underlying cash balance. And this year, the underlying cash balance is forecast to be a deficit of $37 billion. But for more than the past 15 years, more government spending has been shoved off budget, including on green subsidies and the NBN and other areas. And that spending shows up in an alternative headline cash balance, a measure that this year is tipped to be a deficit of $57 billion. That's $20 billion more than the most quoted underlying measure. If I was still running the Financial Review today, I would switch to reporting to the more realistic and bigger headline budget deficit number. That's the more realistic one. Second, politicians still dutifully follow most of the procedural rules laid down by law. The books are open for all to see. But the politicians really need to reinstate credible versions of the so-called fiscal rules established by the Hawke-Keating government and then further by the Howard Costello budget government. Treasurers used to commit their governments to running a balance or even a small surplus over the course of the economic cycle. So they would commit to running budget surpluses during upswings so that they could offset deficits during downswings. Or they could commit to restricting growth in government spending to within the growth of the overall economy, or impose a ceiling on taxes as a share of the overall economy. Now, such fiscal rules are the counterpart of the 2 to 3% inflation target run by the Reserve Bank that seeks to anchor expectations of future prices growth. In the budget world, such fiscal rules seek to anchor political expectations of what voters can expect from government, or to impose some discipline on what politicians can promise, to ease taxpayer fears that they will be slugged harder in the future by higher taxes, and similarly to encourage businesses to invest in growing the economy, and to reassure the bond markets that the debt that they have bought will retain its creditworthiness. Now, journalistic skepticism ought to be more exercised by the extra tax that the government is taking from its citizens each year from stealth that I mentioned before. What do we want? Index the tax scales now. Third, don't imagine that it could all be solved by jacking up taxes, because higher taxes come with costs. Already our top marginal tax rate of 47% is one of the highest amongst comparable countries, and it kicks in at a relatively low multiple of average wages. In a world of footloose capital and labour, this encourages Australian tech entrepreneurs and professionals to set up shop offshore. That neoliberal Paul Keating says that the top marginal tax rate should be no higher than 39%. And don't imagine that the problem can be solved by screwing more out of big bad business, such as miners and gas exporters. Australian governments already take a relatively high share of their taxes from big business. And our big resource companies, such as BHP and Woodside, now clearly have lower taxing global alternatives in which to invest their capital than just in Australia. And finally, and this is my biggest point, journalists generally need to be wary of becoming advocates for the causes that they cover. We live in a world where every problem is supposed to be solved by more taxpayer money or more government regulation. Now, there'll always be calls for more government spending on the disabled, on mental health, on sexual violence, on subsidised childcare, on the scourge of this or that, on putting more and more young Australians into university, or on reducing university student debt, on harebrained, very fast train projects. Now, the NDIS highlights how even very worthy causes can develop their own industries that also have to be fed. Cutting uni student debt by 20% doesn't get rid of the debt. It just pushes it on to mostly less advantaged non-graduate taxpayers. It's regressive. As the Reserve Bank says, we are living in an economic world of capacity constraints and trade-offs. We can't shake the China money tree forever. Someone has to pay for lunch, even if it can be delivered cheaply by underpaid migrant Uber workers. Spending more on one worthy cause usually means spending less on another. And just for balance, journalism needs to also advocate for the interests of taxpayers, both today and in the next generation. Thanks for listening, and I'm happy to take questions and enter a discussion.
Thanks very much, Michael, for your perspective. We'll now open the floor for a few questions specifically for Michael. I've got one question that's come through. Please don't be shy, otherwise Jason and I might have to grab the microphone as well. Michael, touches upon some of your closing remarks there about university. Ella asks, I'd be grateful to hear your thoughts on the changing university subsidies and fee structures and their role in long-term economic resilience.
Now, I imagine that refers to what the Morrison government did, where it's I forget the term for it, where they jacked up fees on arts graduates and reduced the fees for perhaps nursing graduates and other things that we needed more of. Look, you can see the principle that you want. If we need more graduates in a certain area, perhaps you encourage that by reducing the amount of debt on it. I think it's possibly a questionable thing whether what's known as a contingent loan, that is, you only pay it in the future when you get income, how much that determines to your decisions of which course you go in today, as opposed, for example, how much pre-tax money you can expect to earn as a salary there. So I think the principle has some perhaps some validity. I really can't. I'm not really quite close enough to it now to be able to say whether that has actually worked as intended or not.
Fair enough. And thanks, Ella, for her question. Now we're jumping around the map a bit. Erin asks, in the case of middle-class dependence and entitlement, what role does the media play in framing potential policy remedies in a positive light, or positive for the budget and taxpayers, rather than hits to individual consumers' back pockets?
Yeah, so we live in a world now where you can't really, governments are always encouraged to give more, to borrow more from the future and give more to people now. The idea that they take anything away from people is sort of, they're said to be, well, you're out of touch. You don't understand how hard things are, and so that governments face huge political constraints, even when you've got big prospective increases in spending, as we saw over the last 10 or 15 years, if a government attempts to reduce the growth rate on that, even that will be highly contentious because it'll be labelled as a cut, and that'll be seen as a very bad thing. So in part, this is a political strategy to get more of the middle class having an interest in the entitlements, so that they'll vote for a party that will promote that policy. So I think journalism is there to, I think, and it is a challenge to come up with a storyline or a way that can be of interest, and we want to spread the message as much as possible, to give all sides of the story. To give there's no doubt in a lot of government spending there's benefits from it, and so forth, that should be brought out, but also the cost, because there's always a cost and a benefit to everything in this world. So it's just being balanced and pointing out a lot in terms of whenever there's these proposals for there's a problem here, we've got to spend more money on it. That's true, maybe that it is a genuine social problem, and it'd be good if we could fix that up. But there's only a limited amount of resources we've got to do this at any one time. And to point out, I think as well, the impact that borrowing more, going more into debt, or taxing more will have on reducing our options for the future. It's a challenge, but you look for storylines to tell the way. I think, I'd say with the middle, like for example, at the Centre for Independent Studies, when we get into the proposal for universal childcare, the sort of storyline, if you like, from a think tank we'll be following is this. We've got a proposal to increase a subsidy to families, couples who are up in the upper income earners. Do they really deserve, with scarce means, should we really be giving subsidies to reasonably well-off people for what is a very regulated, I'd say, inflexible childcare centre? Or should we be doing something that what the CIS will go for will say, and it's out there as a part of the public debate? Can we give people more choice and more flexibility in both how we deliver childcare? Can Australians come up with all Australians in a street, in Ramsay Street? They might be able to come up with a childcare arrangement for themselves that they can work out. Are there less expensive and more flexible ways that Australians can come up with the answers, rather than having a big government-delivered non-means test universal payment, which will add billions of dollars extra to a budget which is already in deficit for the next 10 years, and with a public debt up to $1 trillion? Should we not be a bit more careful before we add to that?
I'm just keeping my eye on the time. We've probably got time for two more questions. Ben here asks, given the need for extra revenue, can you expand on why you think extra taxation on gas exporters might be a bad idea? And he states the context. I'm asking as it's in the news through Senator Pocock's advocacy, among others.
Yeah, so there's a lively debate and a valid debate about the amount of what they call resource rent tax of, say, the big gas companies. And it's often said they don't pay any tax, and that's not true at all. Some of the, say, a company like Chevron, I think at my latest, was about, I think, the fourth largest, from my memory, fourth or fifth largest taxpayer or corporate taxpayer in Australia. There is the big LNG producers, of course, invested like tens of billions of dollars into these big gas processing chains. Now, if you're going to pay tens of billions of dollars into a project, you usually, in principle, whether you should pay tax until you're actually getting a profit from that investment is the question. Should you pay a resource rent tax up front for that? Will that discourage further investment? And remember, these big companies like Woodside are also under a lot of regulatory pressure in Australia. They're struggling to get the Northwest Shelf gas project, Australia's biggest ever resource project. And of course, there's no doubt that the gas industry already contributes a lot to government revenue. There's a legitimate debate about whether it should be more or not. I wouldn't say there isn't, but they do have choices now in where they put their capital next, and other jurisdictions will offer probably better deals for them. And so we've got to watch out we don't actually miss out on the next wave of resource investment.
Got time for one more question. Michael, we'll have to get you back to a feature, perhaps, but only time for one more. And Alex asks, I'm an education reporter in Victoria. Sadly, when I pitch a funding yarn, I see my boss's eyes glaze over. How do we make our editors and audiences care more about stories with big numbers?
Yeah, I think I'd ask the question: why has the substantial increase in spending on schools, secondary schools, and you've set out how much that is? It's been a very big increase. Why has that been associated with declining school scores? And really, we think a lot about in Australia, when the government's got a problem, they'll say, "It's okay, we'll fix that because we're going to spend all this extra money on it," and that just becomes the headline amount. And we're going to spend, tens of $billions extra on it, and so it becomes a competition about how much input of money you can put into something, rather than what you really want to do is you want to spend less if you can. It's really about the outputs. How can we improve educational performance in Australia's schools, because it has been slipping in absolute terms and relative to some of our peer economies. So I can if you tell the overall story about spending's gone up but educational performance has gone down, we don't want that to happen. We want to improve educational performance. And why hasn't that increased spending improved it? Maybe there's some storylines in there, but I feel your pain as well.
Well, that's about enough time we have, sadly, for the Q&A, Michael. Thank you so much for sharing your insights and for taking questions from the audience. As I said, perhaps a revisit, another webinar is on the cards in the future, because I feel like we could talk for hours on end. But we'll have to bid you farewell for now, and thank you very much for your contribution.
Okay, thanks, John, and thanks, everyone.
Thank you. Okay. There we go. Okay, we're just going to turn to the program itself now and go through a few nuts and bolts. And there will be an opportunity to ask some questions at the end of the webinar. We've got another 20 minutes or so, and then we'll take some questions at the end. So turning to the program itself, as you're probably well aware, the program or the workshop, the one-day intensive workshop, will take place in person in Canberra on Monday, the 13th of April. Participants will travel on Sunday, the 12th of April and depart Tuesday, the 14th of April. Successful applicants are eligible for up to 2 nights accommodation. So we bookend before and after the workshop itself with accommodation. And all travel and program costs are fully funded by McKinnon and administered by the Walkley Foundation. That means there is no cost to attend for yourself, the individual, or your media organisation. Now, the workshop is deliberately in person because of the interactive nature of the sessions, including discussion, exercises, and peer engagement. Remote attendance just simply isn't feasible, unfortunately, and won't be available. And approximately 15 journalists will be selected through a competitive process. Now, across the day, participants will explore how state and Commonwealth budgets work in practice, understand how governments frame fiscal choices, learn how to question and test spending decisions, and build confidence reading and interrogating budget papers and policy announcements, with the whole idea of strengthening scrutiny and storytelling around public spending. So participants will also have the opportunity to join follow-up online sessions to delve more deeply into selected topics covered during the workshop. And we're fortunate to have an outstanding group of contributors confirmed already for the workshop, with more to be announced, bringing together experience in journalism, public policy and government. Those names include, of course, Mike Baird, the CEO of McKinnon, and of course, the former New South Wales Treasurer and Premier, Michael Brennan, CEO of the E61 Institute and former Chair of the Productivity Commission, Sam Reinhart, Head of the Parliamentary Budget Office, and Tom Crowley from the ABC's Federal Parliament House Bureau. And Jessica Irvine will serve as MC and facilitator throughout the day. And of course, Jess is one of Australia's most trusted economics communicators. She's known for translating complex financial issues into clear, accessible language. So she'll be able to thread everything together and make it flow. So who should apply? The program is targeted at experienced journalists from generally non-business reporting specialities. So that includes reporters moving into more complex policy coverage. It includes skilled journalists who have not worked on a public finance or economics desk, and journalists who regularly cover the consequences of budget decisions, government policy, and service delivery. So if you regularly find yourself reporting on the impact of government spending, would benefit from deeper confidence in understanding how those spending decisions are structured and framed, we think this program is designed for you. So applications opened on Thursday, the 19th of February, and they close at 11:59 p.m., so just shy of this week, midnight, on Wednesday, the 11th of March. And before you ask, there will be no extensions, okay? Applications are submitted via AwardForce. If you've got any prior experience dealing with the Walkley Foundation, you'll know that all of the applications go through that online portal. It's relatively easy to use. If you do have any questions about how to use it, I'll put my email address up at the end of the presentation. So you will need to provide examples of recent work, a short statement outlining your interest, why you think you should be selected and why you stand to benefit from the program, a brief story pitch engaging with government spending or budget decisions, i.e. how you put your newfound knowledge into practice through 3 stories, and a statement of support from your editor or equivalent. And applications will be assessed by a panel of senior journalists to be announced and McKinnon staff. So they will consider experience, commitment to public interest reporting, the capacity to apply the training, and the strength of your pitch. And some applicants may be invited to a short online interview. And I put up the broad dates that we'll be dealing with towards the tail end of this deck. So successful applicants will be expected to apply their learning in their reporting. Now, what do we mean by that? Participants must be willing to publish at least 3 pieces of budget or fiscal reporting following the workshop that apply the skills and the insights gained. Now, these could be articles, they could be analysis pieces, or they could be broadcast segments. The intention is to ensure the training translates into tangible public interest journalism. We recognise that editorial decision-making and the news cycle can influence timing. And the publications are not always, publications not fully within an individual journalist's control. That's life. The commitment reflects an intention to apply the training in practice, not a rigid publishing schedule. Participants will also support McKinnon and the Walkley Foundation in evaluating the effectiveness of the program through some kind of acquittal process, post-workshop surveys and the like. Importantly, the program does not influence editorial decision-making or independence. It is a non-partisan program designed to strengthen capability, not promote a policy position. And participants will be expected to adhere to the MEAA Code of Ethics in any reporting that applies to learning from the program. Now, we have an opportunity now to ask some questions, so I would like to turn it over to the audience. Please use the Q&A segment button at the bottom of your screen to submit your question. Please feel free to raise anything: eligibility, expectations, logistics, any application details about the program structure itself. We are all ears. I'll either be able to answer your questions or Jason, who's still on the line. Have we got any questions? At the moment, we don't. If you think of anything, please feel free to either drop it in the Q&A button or you can email me later on. Is there any perspective, Jason, that you would like to volunteer? Anything to add to your earlier comments?
Yeah, thanks, John. Would like to take the opportunity once again to say thanks to everyone who's attended this session, and thanks to anyone else that might be viewing this online afterwards that's interested in joining. What I would say is some of the questions that we had in the chat for Michael, we haven't been able to answer today, but they're definitely the kinds of things that you'll get from turning up to the session and if you're successful. How we can report on big numbers, how we make a distinction between big pieces of infrastructure investment, which ones are worth it and which ones are not, how we can think about public value. These are all of the kinds of things in a really non-partisan, non-judgmental way we're hoping to cover in the session itself. So really glad that these questions are coming out. Very encouraged by the nature and quality of this stuff, because this is all the kind of stuff that we want to cover on the day. And we'll hear different perspectives on how you might be able to access the data, how you might be able to tell that story, how you might be able to convince your editor, and how you'll be able to engage a wider range of Australians in a simple and compelling story that does take into account some of these really big issues. So I want to say thanks to everyone that's made the time to come today and for your interest in the questions and in our program more generally.
Thanks very much for that, Jason. We do have a couple of questions that are slowly but surely filtering in. Now, Sasha asks, can you give us a broad idea of the kind of pitches you'd be interested in? Jason, any thoughts perhaps in broad abstract terms?
We are interested in engaging a range of Australians who haven't been traditionally exposed to and engaged in the public fiscal conversation. So we're looking for things like an interesting take or angle on the work, but also how can you reach new audiences that maybe aren't the kinds of people that would read about this kind of stuff in the Australian, in the AFR, in the broadsheets. So a real focus on engaging communities. Two, we're really interested in making sure that the work is impactful. And so what we're hoping to do is to say, if we know there are some significant fiscal challenges, how can we get reporters and journalists who are interested in those portfolio areas that are dealing with some of the really big changes that are going on in Australian society? So, for example, if you're covering defence, if you're covering some of our big social services areas where we do see significant growth in spending, those are the types of portfolio areas we'd like to get a good spread of across the cohort of people. And of course, we're interested in a diversity of views. So whether it's regional Australia, whether they're young Australians, whether that's people that are coming from a certain ethnic group or a regional location in Australia, all of that is really important to encouraging more Australians to be part of this dialogue. So the big message for me is, make sure that your pitch is linked to some of the big challenges, whether they be the fiscal challenges or some of the other portfolio challenges, aging, geopolitics, climate, intergenerational equity, social cohesion. Those are the things that are really driving our interest in funding and supporting this program. And those are the things that will be really attractive as part of that application process.
Great. Thanks, Jason. Eliza asks, a very silly question, not at all, Eliza, but is this a continuing program? It may be a stretch to get a successful application in this year, but really helpful to work towards 2027 if it's around. Jason, that might be a question for you.
It does sound like a question for me. Well, the answer to that is quite possibly, and our intention is to be in this for the long term. This is the first, and we will be doing, as John said before, a kind of investment return analysis, right? Is this the kind of thing that's really helping Australians get engaged in these really important parts of our policy and our democracy? We'll almost certainly flex the program the next time to learn lessons from this. So there is definitely that, but that's what we would do anyway. But I think the answer to that is kind of depends. If it is the kind of thing that does produce good results, we hope to not just continue, but to significantly expand this initiative. So our aspiration going into it is to make this a permanent feature of the landscape. But of course, like everything we do, it's driven by the effectiveness in achieving the goal that we'd like. So hopefully that's not the most concrete answer, but I think that's a fair assessment of our thinking today.
Fantastic. Thanks, Jason. Are there any other questions? We have one that's just popped up now. Sophia asks, in terms of examples of work, are you looking for attempts to cover budgets, fiscal matters, or stories on other topics, e.g. health, climate, that could have been improved with better economic literacy?
Yeah,
Moving on for you, Jason, again.
John, is probably a bit of both, but I
Hmm.
certainly am interested in the latter. We've talked about this conversation today, framed in budgets and a lot of macro issues. In reality, one of the most common ways in which these issues of spending and delivery really hit is within portfolios. So individual policy announcements, scrutinizing how much is being spent and how it's being spent, the quality of spending really matters. So we are very much interested in pitches that focus on healthcare, what's happening in social services, what's happening in education, defense and public safety. All of that stuff is really important to us. And we probably see that the reporting on the budget more generally, the fiscal position more generally, is probably already well managed and catered for in terms of some of the organizations and outlets that are focusing on that. What we want to do is to get to a broader range of Australians, and probably that's going to be through more portfolio-based areas and journalists. So very much interested in the latter and welcome those applications for sure.
Fantastic. Thank you, Jason. I don't think we have any more questions coming through. So we might start to wrap things up. I'll pop my email address up on the screen after this slide. So rest assured, if you do have any questions about the nature of the program, logistics, or anything about the intricacies of material that you need to submit or what the pitches might entail, please feel free to email me, and together Jason and I can give you an answer. But in the absence of any further questions, thank you everyone for taking the time to join us today. Look, we really appreciate how busy newsrooms are, and the fact that you've carved out an hour to consider this program speaks about the seriousness of which you approach your craft. So it is appreciated. If what you've heard resonates today, I encourage you to apply before 11:59 p.m. on Wednesday, the 11th of March. Okay. I'm a former journalist myself. I know what deadlines are like. I know that you tend to slowly but surely ramp up to it, and there's a mad flurry of activity in those last few moments. Afford yourself a little bit more time. It is a lengthy application process because it is quite a complex program and complex subject matter. So have some time up your sleeve to think very critically about your application, and email me with any questions that you might have because as I said, there will be no extensions, unfortunately. The cohort will be small and the selection process will be competitive, but we're looking for curiosity, rigor, and a commitment to public interest reporting. If you have any further questions after today, please don't hesitate to reach out to myself from the Walkley Foundation. There's my email address up on the screen. And of course, if you're watching this as a catch-up and you'd like to access any more information about the program, any frequently asked questions, or any of the terms and conditions, just scan that QR code and be able to access the website. But thank you again to Jason, and thank you to Michael for their insights, and thank you to all of you for your engagement. We hope to see many of your applications come through. Thanks again, and have a great afternoon.
Thanks, everyone.
Bye, everyone.